You're finally ready to trade in moldy share houses and passive-aggressive flatmates for a place of your own. You've saved the deposit, stalked Rightmove like it owes you money, and your offer just got accepted. Victory dance time, right? Not so fast. Your solicitor just rang, and your budget's just exploded. Your stamp duty bill is £50,000. Cue jaw drop. You'd calculated £20,000? Where did the extra 30 grand come from? Well, turns out HMRC's got Google Earth, and they've noticed your little rental in Brisbane. The global property catch. In the UK, stamp duty land tax, SDLT, is built on a deceptively simple question. At the end of today, how many homes do you own worldwide? If the answer is anything other than just this one, boom, welcome to the additional property surcharge. An extra 5% across the full purchase price, even if your other place is in the Southern Hemisphere and hasn't seen you in 5 years. That quarter share in your sibling's Gold Coast unit counts. The holiday flat in Queenstown you forgot was in your name still counts. Even if it's a tiny slice. Even if it's sentimental. If it's worth more than £40,000 and it's got a roof and a kitchen, it's on the list. Even if this is your first UK home. Even if you've been renting in London since Boris was mayor. If you've ever owned any residential property anywhere on Earth, you don't qualify for the UK's first-time buyer relief. That dreamy 0% on the first £300 and gone. It doesn't matter that Australia and New Zealand only look at domestic ownership. HMRC has a longer memory than your Year 8 diary, and it's not interested in how other countries define first home. So you think you're in the clear? Here are some sneaky stamp duty traps have caught out smarter people than you. 1. Own just 10% of a property back home? That's enough for the UK to hit you with a stamp duty surcharge. You could own the equivalent of a garden shed and they'll still come knocking. 2. That random old title deed in your grandma's attic? The one you barely remember inheriting? Surprise, it still counts. The UK tax system never forgets, even if you do. 3. The biggest facepalm of all. Thinking New Zealand's no stamp duty policy applies in the UK. Newsflash, it absolutely does not. The UK is still charging and still very much in the mood to collect. So yeah, blissful ignorance, not a defense. This isn't about loopholes. It's about strategy, awareness, and consequences. The best move? Get clarity before you commit. Do a global property stock take. Know what you own and what it means for your SDLT bill. If you do still own something overseas, it's not the end of your UK property dreams, but it is the end of your low-tax hopes. Yes, some people sell before buying. Others hang on and budget for the surcharge. Both are smart, so long as you're not gasping for an extra 30k at the finish line. HMRC isn't out to ruin your life. It just doesn't think borders matter when it comes to property. So if you're an Aussie or Kiwi eyeing a UK home, plan for it, budget for it, and whatever you do, don't find out too late. And remember, if you need backup, no worries is ready when you are.